Hello and welcome to Biz1st Review 360, the pulse of Sri Lankan business. You're with me, Joel Outskun, and this is the couple of minutes that we keep you informed of the latest and trending business stories. Well, starting off with ratings this evening, Fitch Ratings says Sri Lanka's insurance claims from the recent flood could reach 15.5 billion rupees.
International ratings agency Fitch Ratings said insurance claims arising from recent flooding in suburban Colombo are likely to be manageable for most local insurers due to low retention levels, but warned that changing weather patterns could raise long-term risks. National Insurance Trust Fund, the state-owned local reinsurer, estimates claims from the disaster to reach 15.5 billion rupees. Fitch expects record-high claims to worsen the combined ratio of non-life insurers in 2016, with higher reinsurance premiums raising future expense ratios. In addition, lower profitability stemming from higher claims could affect capitalization of some lower capitalized insurers. However, Fitch expects credit profiles of rated entities to remain intact. Fitch said recent floods are likely to raise awareness and increase demand for non-life insurance. Sri Lanka's uninsured population is high, with non-life penetration at around 0.6% of GDP. The non-life insurance market is dominated by motor insurance. Motor is covered under excess of loss reinsurance covers in the event of natural catastrophe. Fitch said changing weather patterns leading to increased frequency and the severity of rainfall raise long-term risks and highlight the need for insurance and proper pricing of such risk, as well as robust flood defense mechanisms. Commenting on the International Monetary Fund program, Fitch Ratings said the IMF facility is a positive step that could help improve policy predictability. Earlier this year, Fitch Ratings downgraded Sri Lanka to B+ from B-, with a negative outlook owing to dwindling foreign reserves, higher debt and policy inconsistency.
We think the IMF program has been a positive development for Sri Lanka because it, in our opinion, provides a policy anchor. However, we're still waiting to see how the authorities perform on the IMF program. We've highlighted this earlier as well in previous reviews of the credit, that a more robust and predictable policy environment could be positive for the rating, as well as less dependence on foreign debt and more dependence on probably FDI, because that really has been an issue with the sovereign. On the negative side, however, if we see a further fiscal slippage or further deterioration in the external finances, that could be a negative for the ratings.
Fitch said high external funding and rapid expansion of credit is worrying.
Relatively high external funding needs, so external liquidity shows up as a weakness. Commodity dependence, if anything, lower oil prices is a good thing for Sri Lanka, so that shows up as a less weak area. Trade openness, well, we expect global trade volumes to pick up with the recovery in the US and the Eurozone, so that's maybe less of a concern than it was. And in terms of leverage, the amount of debt that's built up in the economy, we've characterized that as moderate, but we've attached a question mark to it because credit has been expanding very rapidly recently in Sri Lanka. It may now be starting to tail off. But it still remains above, I think, what the central bank here would consider to be their comfort zone. So the pace of credit growth in Sri Lanka is maybe something that we need to think more about going forward.
Fitch Ratings says the challenge facing the government is to find the balance between credit growth and consumption.
We did see that the central bank hiked interest rates in February 2016 to slow down credit growth. I think the key question here is striking the right balance. We've seen that credit growth tends to drive consumption demand and increase demand for imports, which then worsens Sri Lanka's external balances. We've seen that the sovereign is quite vulnerable to trends in credit. So at the moment, I think what we see is a challenge between striking the right balance of credit growth at the same time not completely slowing down consumption, because it still remains a key driver of the economy. We did see, as I said, that in 2015 there was a sudden spike which led to a very significant increase in car imports, which further worsens the external balances of Sri Lanka.
Brits voted Thursday to decide the future of the United Kingdom and Europe in a referendum on the European Union membership, creating anxiety across financial markets and around the globe. And the question is, how will the European referendum affect Sri Lanka's economy?
Britain voted to leave the European Union in a historic referendum, an outcome that has jolted financial markets amid setting the country on an uncertain path, dampening EU efforts of forging greater unity, Reuters reported. World financial markets dived as nearly complete results showed a 51.8% to 48.2% split for leaving. Sterling suffered its biggest one-day fall of more than 10% against the US dollar, hitting a 31-year low. On market fears, the decision will hit investments in the world's fifth largest economy. The vote will initiate at least 2 years of messy divorce proceedings with the EU, raise questions over London's role as a global financial capital, and put huge pressure on Prime Minister David Cameron to resign, though he pledged during the campaign to stay on whatever the result. We asked Deputy Minister of Foreign Affairs Dr. Harsha De Silva how Brexit would affect Sri Lanka.
Now, as for Sri Lanka, why this is important is because to the European Union, our exports, 40% goes to the UK. So currently, we don't enjoy duty-free access to the UK because we lost GSP Plus. But as this whole country knows, we've been working really hard on getting GSP Plus back, and we are quite certain that within the next 8 to 10 months, we will get it back. Now, if the UK leaves the European Union, we will not enjoy that duty-free access to the United Kingdom. That will be a significant blow to our exports, or rather, we will be in the same position as we are today. But our whole point is to try and expand the export basket and also the volume into the EU. So we'll have to action plan B, which is to attempt and enter into a new free trade agreement with the UK. But that will take some time because the UK themselves will have to enter into various other trade agreements with other people.
Economist Anushka Vijayasinghe also clarified the stand of the Ceylon Chamber of Commerce.
We are seeing a huge amount of volatility in international markets, both currency and equity markets, following the vote, Britain's vote to leave the EU. The pound against the dollar has fallen extremely sharply and now at levels not seen since 1985. The level of volatility we are seeing in these in financial markets again have not been seen since the crisis in 2008. Now we don't know to what extent this will continue and where it will bottom out, but clearly these are having a lot of impacts on international financial markets. Now that is the main channel through which, in the short term and in immediate term, Sri Lanka will be affected through that international market, financial markets channel. This will affect capital flows to Sri Lanka. It will affect Sri Lanka's ability to borrow and the borrowing costs in international markets. We will also have to see how this sits alongside Sri Lanka's application to regain GSP Plus. There will be a lot of political gridlock and negotiation taking place in Europe following this Brexit vote, and a lot of political energy will be spent on figuring out what the new arrangement, political, trade, etc. will be with Britain and the EU. So we are not quite sure to what extent this will affect Sri Lanka's GSP Plus application, but you can be assured that there will be a lot on the agenda for EU politicians, and how this stacks up against that remains to be seen.
What's brewing in the tea industry? Let's find out after this short commercial break. Welcome back. You're watching Biz1st Review 360, the pulse of Sri Lankan business. You're with me, Joel Outskun, this evening. Well, the Colombo Tea Traders Association is urging the government to do more to revive the tea plantation sector hit by declining output, low demand in the export market, and labour demands for higher wages.
The story of Ceylon tea dates back to the early 1820s when coffee plantations were flourishing in the central hills of Sri Lanka. With the Jamaican coffee industry collapsing following the abolishment of slavery, the coffee industry in Ceylon boomed. By the mid-1870s, Sri Lanka became the largest producer of coffee in the world, but not without signs of a plant disease known as coffee rust. Within a decade, coffee rust wiped out the entire coffee enterprise from the island, paving the way for a new plant to deck the hill country. Scotsman James Taylor, fondly considered as the father of Ceylon tea, was the first planter to succeed with tea. Since then, Sri Lanka's tea plantations have flourished, earning the reputation of being the producer of the world's best tea. Since lately, the crop output has been on the decline. Low auction prices have also added on to the troubles of the tea industry. The Colombo Tea Traders Association says compelling pleas for support are yet to receive sufficient attention from the government. Tea production in May 2016 had fallen 6% to 30.6 million kilos from a year ago, largely owing to drought.
Since achieving the highest crop of 340 million kilos recorded in 2013, we have seen successive declines in crop of 2 million and 9 million kilos respectively in the following years of 2014 and 15. Naturally, with auction prices declining sharply since mid-2014, throughout 2015, and still continuing, our annual income from tea exports have recorded a declining trend. Export income for 2014 recorded a volume of 327 million kilos with an income of 1.63 billion, whilst in 2015 our volume dropped by 20 million kilos down to 307 million kilos with an income of only $1.34 billion. This was a sad situation for our tea trade.
The industry is also battling poor quality teas, which have resulted in low auction prices.
The problem lies with all the poor teas that we produce. With proof of this fact being evident each week at the auction, some producers still continue to indulge permanently in bad manufacturing practices, and they complain about lower prices and the losses they incur, expecting government subsidies in an unreasonable manner. The withdrawal of the fertilizer subsidy and the inability to afford procurement of fertilizer at the effective time of application contribute partly to the production of a fair weight of inferior quality teas, which depresses the auction prices even further. But we never try to accept it. It has been proven by a few committed plantations that follow good manufacturing practices and produce great teas, that good teas are rewarded with attractive prices. If the majority of our manufacturers resort to such practices, I'm certain that many others will follow their example. Teas of good quality will invariably fetch equitable prices.
The Colombo Tea Traders Association says Kenya, a fierce competitor of Sri Lanka, is far more productive in crop output than Sri Lanka, where workers are demanding higher wages. The industry is also urging the government to help regain the Iranian market, which has tilted towards Indian tea.
Iran is not supporting us as much as they did, and they are supporting India better because we have a financial issue of the state with Iran that is disturbing the Iranian government and, as a result, the trade. And it is time the authorities, the high authorities, took into account this problem and resolve this so that we will go back to the old Iranian size of the market.
A fisheries expert has assessed the dispute of the fishing industry between India and Sri Lanka. We'll have details of this after this short commercial break. Welcome back. You're watching Biz1st Review 360. Well, illegal fishing by South Indian trawlers in Sri Lankan waters have caused economic hardships to the people of the north coast and severely damaged the island's marine ecosystems. In our special segment, Speak Your Mind, Independent fisheries expert Dr. Steve Creech delves deeper into the fisheries row between India and Sri Lanka.
When Tamil Nadu trawlers cross the international maritime boundary between Sri Lanka and India, they are engaged in illegal, unregulated, unreported fishing. Okay, they're not engaged in poaching. And it's important to use the correct term for what Tamil Nadu trawlers do when they enter Sri Lankan waters, because internationally there are directives that are addressing IUU fishing at a global level. And in the EU, you may know that there is a regulation that prevents and deters or to eliminate IUU fishing that was introduced in 2010. That ban was brought into place in October 2014, and over the last 18 or so months, it's cost the Sri Lankan seafood sector more than 150 million euros. The reason the ban was brought into place was IUU fishing by Sri Lankan vessels in the Indian Ocean. The state governments within India have the responsibility for regulating their fisheries within territorial waters. The distance from the shore up to 12 nautical miles, 22 kilometres, and within that jurisdiction it's the responsibility of the state to manage their fisheries. So this fishery issue between Sri Lanka and India is a result of fishery mismanagement by the state government of Tamil Nadu. Basically, it's the $41 million worth of Sri Lankan seafood that are harvested illegally every year by Tamil Nadu trawlers fishing illegally in Sri Lankan waters. At the current exchange rate, that's worth 6 billion rupees every year. That's 6 billion rupees that are being deprived of to Sri Lankan fishermen fishing in the north of Sri Lanka. The other key economic driver to this issue is the massive overcapitalization of Tamil Nadu trawler fleet, or the fishing vessels, the Tamil Nadu trawlers in Tamil Nadu. It's been estimated by academics in Tamil Nadu that as many as 2,500 Tamil Nadu trawlers are uneconomic, unproductive assets. What this means is there are simply too many trawlers in the Tamil Nadu fishery sector for the fisheries resources within Tamil Nadu waters. So Tamil Nadu trawler owners essentially have three options. One, they can fish legally in Tamil Nadu waters and probably make a loss because there are too many boats fishing for the resources. Second, they can leave their boats in the harbour, this is Rameshwaram, not make a loss but also not make a profit. The third option is that they can fish illegally in Sri Lankan waters and harvest that $41 million worth of Sri Lankan seafood from Sri Lankan waters. Sri Lankan fishermen in the north are from the fishermen's caste, the low caste, Kariya caste, which it covers almost all the Tamil fishermen in the north, and they're also Christians. The political representation of Tamils in the north of Sri Lanka is predominantly from the upper caste, Vellala caste, who are predominantly Hindu. Last year, 2015, Thanges Paramsoti made a statement or made an observation that in the last elections, none of the TNA MPs elected to Parliament were from any of the minority castes. There's a lack of representation within Tamil politics of Sri Lankan fishermen in the north, predominantly Tamil, on this issue. The Chief Minister, Vigneshwaran's biggest supporter, most vocal supporter, is of course the Chief Minister from Tamil Nadu, Jayalalitha. In fact, when Jayalalitha was re-elected last week, he made a statement congratulating her and looking forward to better social and economic cooperation between Tamil Nadu and the Northern Province. And the first thing he could do is ask her to stop sending the trawlers to fish illegally in Sri Lankan waters, because we get 6 billion worth of rupees straight into the northern economy. Sri Lankan disinterest in this issue. The Indian High Commissioner pointed out that both the Prime Minister and the President have met with their Indian counterparts 4 times this year. But during none of those meetings has either the President or the Prime Minister strongly advocated or voiced their concerns about Tamil Nadu fishing illegally in Sri Lankan waters. For me, the Sri Lankan disinterest in this issue is largely because it happens in the north of Sri Lanka. Politically within Sri Lanka, this is seen as a Tamil issue. It's not seen as a Sri Lankan issue. It's an issue that affects Tamils in the north of Sri Lanka. So the Sinhala nationalist parties, the minority parties that tend to make a lot of noise about nationalist issues aren't bringing this issue up because it's happening in the north. Please just imagine for a minute what would happen if Tamil Nadu trawlers were fishing off the coast of Kaluthura, Galle and Martha on Monday and Wednesday evening, and they were doing it in their thousands. Now, we would have solved this problem very simply within 3 days.
Well, that's all the business news we got for you this evening, and thank you very much for stopping by. Before wrapping up, we would like to inform you that you could keep abreast of the latest and trending stories on our website www.newsfirst.lk, and also find us on Facebook by just simply typing Biz1st Review 360. And we hope that you are now up to date on the latest stories. Thank you for stopping by. For the Newsfirst team, I'm Joel Outscoon. Take care. Good night.